Quite strong statements coming in from US President Donald Trump on that developing story. Now let's put the spotlight also on the oil prices, which, remember, for India is extremely critical as our largest export bill comes from buying of crude oil from the overseas market. So oil has been on the boil on the back of the geopolitical tensions between Tehran and Washington. A decline in inventories also is something to be watched out for. Peter Maguire, who is the CEO of AustraliaTrading.com, joins us with more details on the key triggers this week. Peter, always a pleasure to welcome you on NDTV Profit. My first question, how do you see this new developing tension between Iran as well as the US? And that has had a fair bit of impact on the oil prices as well.
Well, good afternoon, Nisha. Yes, it certainly has, and we've hit 67 for WTI. You've got, I'm looking on the screen now, 72.20 for Brent, and that's really a bit of a wake-up call. We're at 7-month highs. You heard the president, he wants a deal in 10 to 15 days. He's putting a timeline on that. He's also said that as far as Diego Garcia, which is positioned 2,300 miles from Iran, would be the military strike place as far as where missiles would be launched from, and you wouldn't be able to retaliate. They can't hit Diego Garcia. So it could be very interesting. There's even thoughts that it could, the analysts saying something could happen this weekend. So let's just wait and see. But the price is certainly bullish at the moment, Nisha.
Right, that's a big concern, Peter, even for Indian economy, because with the Russian oil being out and also we have lesser, cheaper resources of oil now to source from the global market. And if the prices really are hiking and spiking because of this, what is the sense if things continue the way they are at the current moment and the stalemate really continues on this developing tension, geopolitical tension? Peter, what are the numbers that we are looking at for Brent crude?
Well, a couple of things also to go into the, I think, into the metrics of all of that, Nisha, is the amount of flow that you have through the Strait of Hormuz. We've got about 19 million barrels a day of crude and refined product that travel through the Strait of Hormuz each day. So if that was to be crimped, then that would naturally impact Asia. We would expect prices to significantly rally to the upside. And there would be, I think, probably a $5 to $10 premium built in very quickly. And then it's just to wait and see, because that can happen over one trading session. And yeah, the markets are very dynamic, and they certainly don't like war.
That's right, Peter. So $5 to $10 of spike is what you are estimating at the current moment. Is there a timeline? How quickly are you expecting the spike to really take place? And what are the other factors which may put a cap on the hike as well? So what are the factors which could really offset the spike if we assess all the factors put together for oil prices?
Well, the first part is if there was to be any strikes, Nisha, and that is the caveat. If there is a strike by the US, then that changes the footprint. And I think that that would add premium as far as risk to the price very, very quickly from a geopolitical standpoint. The other side is if Iran does come to the table and we see some form of deal done on that nuclear talk, then that would satisfy and settle the markets quickly. So it all depends on the actions of the US naturally and the actions of Iran and how that is impacting, and inhaled from the market. So either it's up 5 to 10 or it could easily strip out $5.
All right. So, Peter, very, very strong words coming out from the US President Donald Trump, where he says all options are on the table. This can only be seen as an escalation at this particular point in time. And that's what the market is also really baking in. But, Peter, if we really look at the various other factors which are really impacting global trade and global economics, there is a new scare which has come in just overnight from the US about private credit, segment, where the asset quality concerns have come up for the traditional software companies. So AI is having its own several pockets of influence on different markets. How do you assess this situation, and have you in particular looked at the private credit market in this perspective?
Well, I have. I mean, it's on everyone's tongue, the blue owl situation, as far as restricting investors' redemptions. And this is going to be fascinating how it plays over the next couple of days. Private equity stocks tumbled, and I'm looking forward to seeing what impact this has naturally in New York this evening, or Friday's trading session. So first off, how long does this take? Secondly, the market expectations, and could there be any form of contagion across other providers? So it's a little bit of unknown at the moment, Nisha, but it's not a good sign. And that's the market for you. And yeah, they've obviously got reasons why they don't want redemptions.
That's right. They have got reasons. But overall, Peter, from the economic standpoint, how much credence will you give to the artificial intelligence scare? How disruptive and very quickly in a short term could it be? Or are we baking in for a longer term play and therefore the markets are showing a knee-jerk reaction? What's your view? Which side of the view are you on? Because a lot of people have also said that the AI scare is also probably more of a marketing stunt and not having an immediate impact. How do you see from your vantage point, and which are the pockets, apart from the pure play IT sectors, which get impacted the most to have an impact on the overall economy?
Well, I think first off, Nish, you've got to think of it this way, Nisha. You've got a 600 billion plus investment that's just been announced over the last couple of weeks. Now, that's naturally a capex spend, and there's going to be a lot of different components as far as where those funds are allocated and the timeline to actually see a return. But one can't challenge the AI side of things because it's spat out so much cash over the last number of years, in the sense of all of these big Mag 7 stocks. So there's the first part. The second one is you've got to be industry specific, how the introduction of AI integrates into a particular industry, because everything's different, and how's that going to either enhance the performance of organizations or impact them. This is all going to be worked through. So it's an exciting time that we're really at the doorstep of innovation, and strap yourself in. It's going to be a very fascinating ride over the next decade.
That's right, Peter. In fact, you said $600 billion of investments have been committed to this AI play. And I must also say that some of the fund managers and investors are of the view that the ROA may not make sense on the kind of investments that is being made, or could be very long-term in nature, which also considers time value of money in terms of getting the return matrices in place. So, Peter, putting all that into perspective, at the current moment, with the US, economy also struggling with their sovereign debt condition, with these issues of AI disruptions really coming in several pockets of assets class as well, equity, private credit, and looking at the geopolitical tension at the current moment, what would be your summary in terms of a short-term view on global economy and therefore the overall markets?
I think one's got to be very conscious what we've seen as far as a bounce to the upside on precious metals, Nisha. You've got gold running at 5,040. It's starting to edge up higher. So from a risk side, people are flocking in. You've also had a nice rally to the upside on the US dollar index. It's running now at just on 98. Bond markets, 407 for the 10-year. You've got a 3.45, 3.47 for a 2-year. So you've seen big moves over the last couple of weeks as far as bond markets, and they're to the downside. So again, we've got geopolitical concerns. You've got the AI, and you've got the blue owl sitting out there somewhere. I'm very fascinated to see how this quarter returns as far as performance, analyst expectations, and of course earnings. So we're halfway through, and it's going to be a very dynamic quarter to look in respect to.
That's right, Peter. And my final question to you, of course, dollar debasement is also a theme that has also elevated gold and silver prices as more safe haven, and Bitcoin has also fallen because of all this chaos. Putting all that in place, what is your short-term view on dollar as well as the precious metals like gold and silver?
Well, I think US dollar will rally a little bit further to the upside. We all understand King dollar will come into play if there is any form of um, military action against Iran, and this could work out over the next matter of weeks. So I'm expecting US dollar to continue to travel up in the sense appreciate in value. So short euro, short pound, and short yen. If you're looking at the gold market, I think it'll probably take another leg up, and 5,100, 5,200 is where I've got a line in the sand. I want to see if it has the conviction to get through there and momentum. Silver's at $78, and I want to see it 85 to 90 to really say yes, it's got potential to run 100 again. So again, it's dynamic. The markets never fail to excite and keep everyone closely monitoring them. So, yeah, the next couple of days and weeks will be exciting, no doubt, Nisha.
Right, Peter, we are in very exciting times, and we'll all be on the toes because there's so many dynamic factors which you alluded to. Thank you so much, Peter Maguire. Always a pleasure to have your expertise coming in on NDTV Profit straight from Sydney. Thank you so much.
Thank you.